Welcome to DMBI.com. This is John. This reports for the 9th of July, and well, you can see that the narrative is having a hard time. All your professional guys are being told that inflation is going to be blah, 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 yeah, blah, blah, completely wrong, and they're starting to realize it because the data doesn't support it. It does support that there's still some weakness, there's still some difficulty, but overall, things are still continuing to move. And now it's all this tariff, tariff, tariff again. And they realized how long from back over here in April, where that trade was completely off the rails and made no sense. But you still have people with money and power saying that that's the current state of things, and it's just not being reflected, and that's creating, no, I would call it a little bit of chaos. You're getting a very bizarre kind of intraday trading because it's where do you go? And that's really what a lot of the professional traders are dealing with at this particular stage. So they're calling it retail buying, holding things up at this particular stage. But, it's your regular entrepreneur in that who's investing his own money and things like that realizes where the potentials are given the changes that have taken place and generally bullish overall. That does that mean that the market isn't in an extended area? Well, it's all relative to your growth. And then you get into the question of, how do you even measure that given where our economics are and the way they use data? Um, completely so alterized that it makes it meaningless. We would talk about this for years on unemployment numbers from GDP, throwing in government, spending on it. It makes it very difficult. You have to really parse through a lot of the detail in order to get an understanding of the true nature of things. And so, that was the basis for a lot of these indicators because they're about the aggregate behavior and, the projection from that of where things are likely to head. Now, you can see we're still at a DOC spread here, soft weakness, but you're not getting the expansion between the lines. And see, these are all relationships, and because they don't have that strong uh, cross-directional nature, you get soft moves, and that's why we're just seeing softness. It's just moving softly across, back and forth, with no strong direction. But what you do get is a reset where all that dry powder is still available, and you can see here no short activity on the MBI readings. Shakeout's still well into the positive, so and you're still even a long way from the 76%. Uh, so it could continue to plug away down. In a single day, can you fill back all the way to what was almost positive extremes? Not quite. Uh, yeah, but it's going to require some impetus, some news, some justification. And the reality is, growth is being held back, and it's pretty plain and simple. And deflation is only going to increase if they continue the deportations and do it in a more, directed fashion. I mean, you've already had almost a million self deportations. The idea of offering incentives for people to return back to their countries by, flying them back, whatever. Um, Again, that opens up discounts for rental property, all sorts of other things, less of a drain on products. And that means that you end up with deflation because to sell the same amount of products that you had with less demand, obviously cheaper prices. So that is going to be always the counter when you're talking about that. And it's interesting because we saw this very specifically in the differences between inflation rates in red states versus blue states. Direct correlation. So, I mean, you can even just look at them specifically and say, well, what's the thing that changed? Why would, one state have lower inflation? Well, beyond lower regulation, that kind of situation, demand. And well, what does the demand change from? Well, we saw what it was. The sad news is, though, for oil, continue to push. Supplies are still very tight. A lot of this, also goes back to the environmental constraints that have been placed on. It's nearly impossible to build a refinery to, refine oil or anything, at least California used to have plenty of them. Now they're almost all gone. You're not going to be getting any new ones. So it becomes an interesting case study there where government blocks innovation and expansion, and you get artificially higher prices as well. Yeah, same lessons, just not learned. But oil is in a pretty strong upside trajectory here, and barring some kind of massive influx, I don't know that that 500,000 barrels that the Saudis from OPEC and that are going to add is going to make any bit of difference, which is probably why they went ahead and did it. Unless you see a change in sanctions from Iran and Russia as far as oil and that, and it doesn't look like that war is ending anytime soon. So that being said, yeah, headwinds. So that's going to create some back and forth. And of course, the eurozone still thinks that they're in great shape, but all the data points just the opposite directions and continues to get worse. So you can prop it up for quite some time, though. We already know this. I mean, you can spend to the nth degree, just as the U.S. did the last 4 years plus, really driving things. And then, the COVID situation, and then before that, the financial crisis, all the same situation, where you just pile on spending in a Keynesian view. But at a certain point, that becomes counterproductive. And right now, the amount of interest that's being paid by the U.S. is insanely stupid when there's no real justification for it. But that's a secondary topic. Gold, of course, is going to suffer in this realization because as it gets clearer and clearer that inflation is not going to be taking place and that these countries outside of the U.S. will make deals for tariffs, whether you think they will or won't. Some of them may not, and their bluff will be called, and their economies will literally tank very fast. And that is the powerhouse of, U.S. as a trading partner. You want to sell your product here in America? Hey, those are the rules. But they allowed all these artificial high barriers into every country. I know here in the EU, and that I mean, to import something from America, all of our costs literally almost double for any products I want that are American. BTC still holding on. It's beautiful flag there, huh? From a charting standpoint. It'll be interesting to see how that breakouts in a soft spot right here, but one push up, and you would look for Bitcoin to make its new run to the upside. ETH also is similar to the Bitcoin in this particular stage, but Bitcoin's still following NASDAQ, and you can see here from 50K, really just muddled. There's no clear conviction. We had the MBI weight spike, still held above the 25, and then the breakdown there should have gone to zero. If it doesn't go to the zero, then I think that you're definitely headed to back to the 100% plus. So becomes pretty clear when you get a failed MBI weight, it just means that new buyers have overtaken the shorts dramatically. It dipped below the 23% here in the pre-market, but hasn't met the zero yet. So we look for any MBI weight spike to come back again that should justify that move. But rising gold down in that particular case sometimes enough to keep it from doing so. So we just follow that along and keep using the readings, because look at this, when you look at it from an intraday, this is an absolute disaster. I mean, what is that? That's just a mess of no clear direction whatsoever, and options playing back and forth, and even those, both sides are getting killed in that particular situation. The Asian session was also same mixed. The European one right now still a little bit to the positive, and that's, I mean, literally we're almost at zero, plus 1.575. So yeah, it's all pretty neutral. But that's going to change shortly. You can only use a narrative so long until the data starts flowing. When the data starts coming out, and we knew that this is the week that we'll start to begin to do that here as we start getting numbers. And I think that will give us a pretty clear direction of how things are going to go, barring any unforeseen things, of course. This was supposed to be the July 9th deadline for tariffs. That's now moving to August 1st. Blah, blah, blah. Keeps just getting pushed down the road. And so a lot of these things aren't going to happen until probably the last quarter, sometime in November, and that you're going to see the effects the delays on things, and we'll know whether the U.S. Economy was able to weather that indecision and then the lateness and all the delays. Of course, the Supreme Court just allowed the firing of a lot more government workers and that'll be an interesting one because it really changes the dynamic of available jobs. Versus how much extra unemployment from government workers and transitioning these people into private sector, definitely a boost for GDP overall, even if they're not getting paid from the government. It's just that much less government spending. So unless you spend it somewhere else, which that has always been the problem. It's like they save in one area, but then they just go ahead and spend it somewhere else. So it's no real net improvement. As always, though, anything relevant, I'll put it on our team chat. Have a good one. Trade well.